Hardiman, who is with
First Alliance Mortgage.
Thank you, First Alliance Mortgage. And we're going to be talking about some topics to do with mortgages and for homeowners or new home buyers. So, how about we start with, how do people prepare to get a mortgage?
Can I say it's never too early to prepare?
Okay, what does that mean?
Sometimes people think they want to wait till right before they're ready to buy.
Yeah, I've had people do.
And I will say, even when you're a year out, because you may need to budget, you may need to prepare your credit, there's all little things to it, so it's never too early. It's never too early. And certainly talking with an experienced loan officer,
Yes.
that can walk them through the process, who can fill the questions, who's not going to just pigeonhole them in a product. You hear that a lot of times. I'll have clients say, I didn't even know that was available when I bought my house.
Yeah.
And I think it's so important that you make everything available to them, so they're choosing their part of the process.
Sure, and they have to understand each product.
Yes.
In order to be able to make that choice as well.
So finding a loan officer they can talk to.
Okay.
Just a conversation over the phone, a couple of minutes, where they're asking, how much do you feel like you can afford a month? How much are you ready to invest? And then even asking them what price of home they think that is. Okay. Sometimes it doesn't all line up, but it gives you an idea. We can bracket what they're looking for.
Now, sometimes people will ask me, well, how much is that house going to cost me? What's my mortgage going to be? And of course, I can't tell them that because it depends on the kind of loan that they're going to get, the type of, how much down payment they're going to put on the. So
mortgage insurance, not mortgage
insurance.
So
hence the importance of speaking with a knowledgeable mortgage. What would you call yourself?
Well, technically, I'm a residential mortgage loan originator.
Okay.
That's our whole title now.
Okay.
They came out and said that. I'm a loan officer.
Thank you.
I've been a loan officer since 1982.
Yeah.
Seen it all.
Yeah.
But it ties in with making sure then after that conversation, find out what they want, they gotta have their credit pulled.
Yes.
And there's no getting around that. Because that really is the first step. That credit score sometimes eliminates some programs. For example, you have a lot of first-time homebuyers that have a tight budget for their down payment. Fannie Mae, Freddie Mac on a conventional basis actually allows a 3% down payment. Most people don't know that. But the credit score on that has to be pretty high, over 700.
Oh, okay.
And so then you're moving then into FHA where you can have a low down payment, a little lower credit scores. Okay. So it all starts with credit scores.
Okay. So the thing that people should be talking, they should be talking with a loan officer. Get with somebody like yourself, of course, and who knows the products and isn't going to just funnel them into one product. Who understands about credit and will pull their credit. And in talking about credit, a lot of people say, oh, well, I don't want them to pull my credit because it affects my credit score. Can you explain that?
Sure.
What,
and it's one of those myths.
Yes.
And we could talk for hours on it, but while it could affect their credit score, it is the lowest hit on the credit score that there can be. Less than 10%. Now, if their credit's already borderline, I know that that's a fear, but they're not going to get pre-qualified. They're not going to get a letter. And realtors need a letter to make an offer.
Right.
And so it's going to have to be
a letter from the lender that says this person qualifies.
That's it. And so it's got to be pulled. Yeah. And then there's a word, and I didn't make this word up, it's called deduping. I know. Deduping.
Duping.
And they can Fair Isaac has a website. I have to share it sometimes.
Yeah.
It's myfico.com and show people you can have your credit pulled by 3 or 4 lenders and it only counts as one hit.
Okay.
It's one of very few things. And so that gives them that availability to talk to more than one lender, to be able to compare. Maybe they talk to a lender and they just don't have that feel. They just, they're not available.
Yeah.
And sometimes that happens. We're on vacation, we're not available.
So how does the credit bureau somehow knows?
Yep. It's coded. So once a mortgage company pulls it up, it's coded as a mortgage company.
Okay.
It's an exaggeration, but you could have 50 mortgage companies pulling its one hit.
Really?
Now, 4 to 6 weeks down the line, then it starts to count. They all count.
Okay, but that should be enough
should be done.
pulse to get people
Yep.
to be able to get a reasonable feel for the kind of, get a few pulls
Yep.
and be satisfied with knowing what their credit is
Mhm.
and what they need to do. Maybe if anything does need fixing at that point.
And sometimes they've been to sites that are free
Yes, and they do not pull
and they don't
all the
pull real
information.
scores. Their
No.
scores aren't real.
Oh, they're not. How
No.
do they?
They make
What's the difference?
their algorithm, however they come up with the score is their own. And it's not based on Fair Isaac, which is the creator of credit scores that the mortgage industry uses.
Okay.
And
So don't count it like sometimes you have a bank account, they say, oh, you can look at your credit score every day.
That's based on the credit that they have. They still pull another credit, but the way they are measuring it is
Yeah.
not as weighted as what mortgage companies have to do. So even someone who goes car shopping, they'll say, I just went car shopping, I just bought a car, and my credit score is, but they weighted on car payments. And so
Oh, okay.
it's not a full shot. Everybody's got their different algorithm.
Yeah.
It's an Rubik's Cube. It's a Rubik. We call it a black box sometimes.
Yeah, really?
Yes.
Wow.
Because day to day it can change, and
Okay.
yeah, paying off, paying down,
Yeah.
closing though is bad. You'll get people that'll start closing off their credit cards, and it can bring their scores down.
Yeah, see, that's something people need to understand too.
Mm-hmm.
That because a lot of people will say that to me, oh, I need to pay off these things before I go apply for a mortgage and get rid of all this debt that I have. And I'm like, no, talk to a loan officer first.
Yeah.
And they will let you know what you need to do and what you should not do. And I think that that's really, really important that people understand that. So you have to accept that you don't know what you don't know.
Yes.
That's it. And you got to find somebody who knows. And that's why talking to a loan officer is really, really important. It's one of the first steps in buying a home.